Hey everyone, welcome back to Corporate Decoder. Ever wonder what a bank does when it swallows another bank whole? Well, today we are diving into First Busey's latest report. And let me tell you, it's a real financial buffet after acquiring CrossFirst. Get ready for a wild ride through balance sheets and income statements, because this report is a doozy. Kevlev, before we begin, if you appreciate getting these insights from SE filings, make sure you hit that subscribe button and join our growing community. We also have a Discord channel linked in the description below. Okay, so this is First Busey Corporation's financial report for the first 3 months of 2025. The big news here is the acquisition of CrossFirst Bank shares that closed in March. This deal basically doubled their assets, making them a much bigger player in the Midwest, Southwest, and even Florida. This report is Busey's attempt to digest it all and show InvestorVault and show InvestorVault and Shoyo. So what are we going to be looking at today? We're going to look at how the CrossFirst acquisition affected Busey, what are the risks and opportunities ahead, and what we can tell from key metrics in the financial documents. First, let's establish who we are talking about. First Busey Corporation is the parent company, and they own a number of other companies like Busey Bank and now CrossFirst Bank. Their stock trades under the ticker symbol BUS on the Nasdaq. It's important to remember the distinction between the parent and the subsidiaries as we go through this. Let's jump right into it. Looking at the balance sheet as of the end of March, debt securities available for sale, those are the investments the bank can quickly sell if they need cash, jumped to $227 billion from $1.8 billion of last year. That's a pretty big increase, suggesting that the bank is stocking up on easily accessible assets. Now here's a key figure. Portfolio loans, that's all the money that they let their clients have, sit at $13.67 billion. But you have to subtract the ACL, or allowance for credit losses, of $195 million at the end of March. That number has increased massively compared to $7.60 billion at the end of December. That's because they bought another bank. We can't expect their portfolio to be 80% higher and not expect an adjustment with $6 billion. With an ACL of $83 million at the end of December, that's because they bought another bank. We can't expect their portfolio to be 80% higher and not expect an adjustment with it. Let's talk about where First Busey is getting all this money from. Deposits. Non-interest bearing deposits, the ones where they don't pay you anything, shot up from $2.79 billion. Interest bearing deposits also saw a big jump from $7.2 billion to $12.7 billion. Now let's look at how they made money. Interest and fees on loans. That's how much money the company makes on their clients. Went from $99.3 million to $139.500 and the growth from the acquisition is obvious now. But it's important to pay attention. But wait, it's not all profits. The interest expense they paid out on those deposits also went up from $43.9 million to $57.3 million. And here's where things get interesting. The provision for credit losses. That's the money they set aside in case people don't pay back their loans, jumped from $5 million to $4 million. That means management is feeling a bit more cautious about those loans and is expected when buying another bank's portfolio. This is a huge number in terms of percentage. This is not a good sign on its own. Now for some quick hits in non-interest income, which includes fees and other sources of cash, unrealized losses from equity securities. Basically, they had to write down some of their investments from a positive $427 to a negative $200 Wani Tam Tafam. Now, when it comes to expenses, other non-interest expense, which can mean anything, jumped by over $6 million. This means higher wages, benefits, and whatnot. We need to stay on top of this line in next reports. All of this leads to a pretty dramatic result. Basic earnings per share went from a positive 0.47 to a negative 0.44. Ouch. Let's look at a change that's not so obvious. There's something called Other Comprehensive Income, or OCI, and it involves things like unrealized gains and losses on securities. They saw a jump in unrealized gains on debt securities available for sale. Basically, some of their investments increased in value in the report. In the report, they went from a loss of $7.9 million to a gain of $23 gains. And losses on securities available for sale. Basically, some of their investments increased in value in the report. In the report, they went from a loss of $7 is available for sale. Basically, some of their investments increased in value in the report. In the report, they went from a loss of $7.9 million to a gain of $23 for sale. Basically, some of their investments increased in value in the report. In the report, they went from a loss of $7.9 million to $1.80 million in the report. In the report, they went from a loss of $7.99 million to a gain of $23.08. Okay, now let's fast forward to something that might not be as obvious: stockholders' equity. Preferred shares are issued. In this case, they went from 0 to 750. What's important to retain is that shares are issued in this bank after the acquisition. Speaking of shares, they paid a dividend. This is something you get if you own stock. Is 0.25 per share. If we were to compare it with the value last year, we can see that it's increasing from $0.24 per share last year. So, they have been keeping up with giving returns. Let's drill down more in the acquisition of CrossFirst, because this is what seems to matter most in the report, and a core element that has been mentioned multiple times. Busey is all in, creating a commercial banking powerhouse spread across 10 states. The bank did post a net loss in the report from 1 month of activities, but that was already expected due to transition expense, something you do not need to worry about. The amount of CrossFirst liabilities relating to deposits was about $6.57 billion. At the time of the report, they bought 33 million new shares. Accumulated other comprehensive income, or AFI, it's a section of the report that went from negative 200 to 722 million because of better revenues from debt. The interest rate risk analysis showed some fluctuations, with the rise of 400 BPS or percent increase, net interest income to decrease by 747%. That number is not looking that good in the future. They might have issues down the line. The cash from the company also saw an increase from $677 million to $1.2 billion, which could be great on its own. So overall, the cash position went well. Looking at the shares outstanding numbers, it's worth remembering what said there were 56 million compared to 90 million at this year's filing. But the shares that the company can buy is around 1.7 million, and it's decreasing, meaning they are buying back some shares. So what do we have here? The financial report shows an expected huge jump thanks to this CrossFirst acquisition. However, this comes at a cost of an adjustment period. Now, looking at these results more broadly, with or without the CrossFirst acquisition, first Busey's management must improve non-interest income sources while controlling operating expenses, which increased significantly. While the numbers improved across every category, mostly due to the acquisition, there is a general downtrend on a lot of indicators. Alright, that's our breakdown of First Busey's latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.